Hi, it's Thursday, February 4th, 2016. I'd like to talk about currencies, the dollar, and precious metals. We've had a pretty tumultuous last 24 hours in terms of the markets. Early yesterday during U.S. hours, we saw some weak data out of the U.S. economic data. We saw the ISM non-manufacturing business activity come in at 53.9. It was expected 58.5. The ISM non-manufacturing PMI came out at 53.5 versus 55. So, and the ADP employment number, which is a precursor to the non-farm tomorrow, came out at 205, a drop from 267 the previous month. So, you know, the economic data in the U.S. are weakening. And today, we've had jobless claims that came out at 285,000. So it was expected 280, so it was higher than expected. And the previous number was 277. And also non-farm productivity dropped by 3%, was expected to go up to drop by 1.8%. So pretty bad numbers. You know, the stock markets continue to go up and down, but in my opinion, generally lower. Yesterday as well, there's comments by Bill Dudley, who's the former head economist of Goldman Sachs, but he's now the president of the New York Federal Reserve Bank. And basically, Zero Hedge caught some of the statements he made to Market News, and they wrote an article saying, futures jump after Bill Dudley hints at Fed policy error, warns of significant consequences from strong dollar. So after that comment, the dollar just got hammered. You know, we saw, for example, against the euro yesterday. Let's see here, just bringing up a chart. Give me a second. So yesterday, the euro was around 109. 109 was the low, and by the end of the day, the high had been 111.46. So a huge move in the euro against the dollar. And right now, the euro is still very strong. We are at 111.95, and the high was 112.39. So a huge move in the last 24 hours in the euro. The pound as well moved quite a lot. We moved up from like 143 handle yesterday, I think, and today we went up to 146.69. So a huge move. We've dropped back in the pound because the Bank of England has come out today after their meeting. And they've downgraded their price forecast. They call it inflation forecast for the next several months, I guess. And also the vote of the meeting was expected to be 8, expecting unchanged, 8 members to vote unchanged and 1 to vote for a hike, but it was actually 9-0. So that's why the pound's dropped, you know, a little bit today, but it's still fairly strong against the dollar. Gold, of course, made a huge move. We broke through 1131 area, which was my objective in the double bottom from last month. So that we've broken through that. And but yesterday, initially, gold traded above that level and came back down, and it was quite frustrating. But then, you know, they couldn't hold on to it, and we traded all the way up to 1144, I think the high was yesterday. And today, gold is continuing to do well. 1153.25, the high is 1155. And I'm talking here, it's 2 p.m. London time, or just after 9 o'clock New York time. So the Dow yesterday rallied quite strongly, even though the S&P, lagged behind. And today, earlier today, it was up over 100 points, I think, on the futures. But right now we're down 70, so it doesn't look too good there for the stock market at the moment. What else did I want to talk about? Yeah, I think the other thing I wanted to talk about is about the bond market and especially U.S. Treasuries and the Federal Reserve. You know, a lot of people think that the Fed can control interest rates. They can to some extent. You know, the very short-term rates, and you know, and they hiked supposedly in December. You know, the Fed funds rate, the short-term rates have gone up, but the market is giving the Fed a complete vote of no confidence because it's very difficult for the Fed to completely control longer-term interest rates or yields. You know, that 30-year yield now is way below 3% at 269. You know, we were above 3% just a month or so ago. I'm not too sure, but you know, the 10-year yield right now is 186. I remember we were trading around 230 late last year. So after that hike, what the market is telling the Fed, you guys are wrong, you know, and I think Dudley is kind of admitting it. And the other thing is the futures market and interest rates, they're pricing no hikes for this year for the Fed. So I think the Fed is, pardon my expression, pissing against the wind. And it's getting messy, and they're going to have to turn around and piss the other way. I think, you know, never like to say this is it, but I think we've seen the top in the US dollar. I'm not sure the US dollar will drop hugely, you know, against the other fiat currencies. It will drop to some extent, but I think the biggest drop for the dollar will be against the precious metals, because the dollar is still the reserve currency of the world, and the only thing the dollar can really devalue against is gold and silver to some extent. So I think, you know, those people who keep looking at the dollar index, yeah, that's interesting, but the real indicator of dollar debasement is gold and silver, because all the other fiat currencies are trying to debase against the dollar. So the only way the dollar can really debase is against gold and silver. And I would expect maybe that would probably help other commodities. In the stock market, I still think, you know, we're on the way down. The Fed's losing a lot of credibility, in my opinion, and that's going to hurt the stock market. And the last thing I want to talk about is the technicals in gold. I was lucky to call that double bottom in gold, you know, in the beginning of, you know, like about a month ago or 6 weeks. You know, the double bottom at 1046.47, and then an objective, and the midpoint at 1089, and then the objective at 1131. And it looks like, you know, we've blown right through this objective. And I'd like to talk now about the next target for gold. And I'm going back here on my chart. Actually, quite a long, yeah, well, beginning, let's say, end of 2013, beginning of 2014, more beginning of 2014. And we've been on this downward trend channel, and it's been downward and very frustrating. And it looks to me now that the key level on this channel, as you can see, is 1200. And I'm sure that the powers that be, you know, the central banks and the bullion banks are going to should put up a fight to keep that level from breaking. But if it does break, you know, that level easily, I would say look out above on the price of gold. And after that, I mean, the high of 2014 was just below 1400. I mean, that would be the next objective in gold. Yeah, so right now it's 10 past 2 London time. Gold is at 11.53. The Dow is down 51. Let's see, silver is 1488, got up to 1493. So it looks like silver is broken through that 1460 for now. And yeah, I'll talk to you later. Take care. Goodbye.